But let's bring the focus back to, of course, market strategies and welcome then on board two guests joining in on the show this evening. Axis Securities MD and CEO Arun Thukral, and with him is CEO of Avendus Capital Alternate Strategies, that's Andrew Holland. Gentlemen, both of you, thank you so much for taking time out for us. Andrew, let me begin by talking to you and, really getting a sense from you on how you are positioned in this market that's just showing no signs of sort of caving into any pressures. Mr. Bhasin, just before we start speaking with you guys, was also saying that every dip is being bought. Right now, how is your fund placed given the abundance of liquidity?
It's still there, momentum still there. So it's too difficult to be bearish at the moment in terms of saying that we expect markets to fall. We do expect markets to fall, but the catalyst is the catalyst which we thought might be there seem to be evaporating. Like France now has obviously cooled down since Macron took the lead. But that said, I mean, valuations are very high. The VIX is kind of under 10, so there's a lot of complacency around. So we've kept with a kind of a high hedge of about 60% for the fund at the moment, on the basis that there are things out there which could obviously take us towards a risk-off trade. But for the moment, momentum is still favourable.
Andrew is relatively cautious in the market, but not bearish. What about you at Axis Securities? What's your own house call at the current juncture?
The broad call for the market is, as of now, I think market is on a high, obviously, and there are 2-3 reasons. The first reason, the immediate reason, is obviously the French elections, where our Macron got very high landslide victory, and now I think the fear of France going out of EU is almost gone. So that is reason number one. Second is there is huge liquidity in the system, and there are mutual funds, FIIs sitting with huge bags of money, and the kind of money so far which has come over $6 billion by FIIs, and the kind of money coming in mutual funds, the kind of even the SIP money coming. So there is a huge liquidity. That is reason number two. Reason number three is that now people have realized that this government is going to stay, and this government is going to come out with a lot of reforms, and this ongoing reforms have given legs to the rally, and one after the other. Even after demonetization, when the UP results came, the government became even stronger. And now the latest bank NPA ordinance and all. So people have that kind of a faith, that kind of a positive view about the government, and this is going to help the market. And the near term, yes, there may be some consolidation happening now, because there are reasons sometimes market to take a breather. So the reason can come in any form. Reason can come in maybe next month, US Fed going ahead with a 25 bips rise. Reason can be not so great start of monsoon. So there can be any reason, but as of now, the market looks fairly valued. If you let's say get 15% kind of corporate earnings, and then you look at a PE of around 18 for the current year, so it's fairly valued. It's not overvalued.
Right.
So we are right now not too much worried.
You're not worried much right now, but Andrew believes that there are some risks at the horizon. Andrew, we were talking earlier about some of the global risks which are perhaps not in the price or are being ignored. What are those observations which are catching your attention, which investors should also be cognizant of?
So I think there's two risks that we see. One is North Korea, where we still think the peninsula there is, as Putin said in Japan recently, is on the brink of war. Maybe he's exaggerated a bit to bring our attention to it, but we have presidential elections in South Korea today, and with a new leader, coming in South Korea, maybe that's the time that North Korea will use some of their rhetoric, as they always do when they get new presidents coming in, to kind of escalate the kind of war of words, and then we'll have to see what the US says. But I think it's a situation that we have to kind of be concerned about rather than complacent about. I think the other one which is kind of worrying me a little bit more is China. It's been what we've seen there is two things. One is short-term interest rates rising recently, which obviously has an impact on not just the property market but the shadow banking sector there as well, and that's very worrisome. And secondly, if I looked at the imports and exports that came out yesterday, they were half the kind of target levels or estimates that brokers had for imports and exports. So again, I think there's a slowdown happening in China, and maybe that's reflected also in commodity prices. So perhaps, and I'm saying perhaps, China might have to depreciate its currency again, or do what it did a few years back, which is start dumping goods into Europe and other countries.
Right. Back home, Andrew, what have you made of the corporate earnings that we've seen so far? I mean, I know they're not blockbuster, but clearly better than what the expectation was, because for example, today it was ABB and Godrej Consumer, which definitely excited the markets. But overall, what can be said about the quality of corporate earnings?
So there's a kind of few underlying themes. I mean, the good companies have continued to be the good companies and delivered what we expected. Obviously IT, and I'm sure it's going to come out with pharma as well, have been poor performers, and I expect that to continue. But looking and hearing some of the commentary, what I'm picking up is that since the demonetization, is that rural India has not really picked up. You saw that from a few of the consumer goods results as well, and commentary about that things are not back to normal. So the rural economy is taking its time to pick up, and that's, by the time it does, we'll get to GST if it is to be implemented in July the 1st, and that again has the potential to disrupt the economy for minimum 3 months, if not 6.
Right, Mr. Thukral, what are your bullish and bearish bets right now? What's the house view?
So the bullish themes, we are very, very bullish on infrastructure company, because if the country has to progress, the infrastructure has to do well, and the lot of EPC player, and we are again bullish for this housing theme. So there are housing finance companies. We are also bullish on auto and auto ancillaries, because auto ancillaries have become very attractive because of the domestic consumption as well as the export component. So even if a auto ancillary who is there in India, so this is becoming a global auto hub. So they are supplying to the Indian listed player, and they are also supplying to the other global auto majors who have set up their shop in India. So they are also going to benefit, and there is a huge export potential because of the other two sectors where there was a huge export potential, like IT and pharma, are facing headwinds. So that way we are slightly cautious on these two sectors, and we are also bullish on the consumption theme, because last 1 or 2 years the kind of money which has come with the consumer, like even the 7th pay commission, when they wanted to spend that money, suddenly the demonetization came, and then this purchase was halted. And last 2 years good monsoons has helped them, that there is some money lying with the customers. So that, and if this year monsoon also becomes slightly better than expected, so this consumption theory is also going to play out. Apart from that, we are also bullish on textile, because China is slowing down as far as the textile is concerned, because the labor cost has gone up there. So India has become more competitive, so we are also bullish on textile sector.
Right. Andrew, let's talk about, assume that this year too, the earnings are not really coming in at the same rate at which the street is estimating. 15-20% doesn't happen, but 8-10% is the kind of number we actually are able to achieve. But when exactly do you see full-on earnings revival coming in? Do you think that's a possibility next year?
So, the way I think about it, I'm talking calendar year now, is that we started off this year with most analysts forecasting again 20% earnings growth. That very quickly got brought down to 15. It's probably going to be brought down towards 10. So if I'm correct on GST, then I don't see that earnings pickup happening this year at all. If the banks say, the PSU banks had to write off all these non-performing loans, then they won't have any earnings at all. So I think it's 2018 calendar year that we'll start to see that big rebound in earnings. So that's the first time I can get more positive on earnings. So I think whilst valuations might remain elevated, it won't be till 2018 we start to see the catch up in earnings for the markets.
And lastly, Andrew, let me also talk about the possibility which you had indicated earlier. If indeed markets come down for some reason or the other in the medium term, which are the areas where you would really get into again? Which are the areas you would buy the dips in?
So I think if a dip comes, and we continue with the sectors that we like, even at these levels, which is the private banks, the large private banks, which we think will continue to take market share from the PSU banks. We like the consumer goods sector. For the first time after many years, we're biting the bullet on the valuations. We think GST is a great game changer for this sector, and for one company in particular where they've had a recent, the group company had a hostile bid. Obviously they're going to have to get their act together in terms of increasing revenues and margins, otherwise they'll find that suitor will be back again very quickly. So I think for the first time in many years I can say that we can see growth coming back to the consumer goods sector, and we could see mid to high teens double-digit growth for this sector. So I think there'll be a shift away from IT and pharma towards this sector going forward.
All right, gentlemen, I'm afraid we're completely out of time. Thank you nonetheless for taking time out for us, both Andrew Holland and Arun Thukral. We'll slip into a short break on the show, come right back, get you another important story. The RBI